Good morning, everyone. This is Kelly Hall with the Longview, Texas Chamber of Commerce. We're excited to have you here, and I apologize for being a little bit late. I'll just kind of share something. Neil is from Oklahoma. I'm from Oklahoma, and we were catching up on some old friends. So I apologize for letting my personal life interfere with my business life. First of all, let me remind you that this webinar is being recorded and it will be made available online at longviewchamber.com. For those of you on the line, you will receive an email later today with a link to listen to it again. Share it with your friends, your colleagues, because we want as many people in East Texas to have the best information possible. Next, there are a couple of features I'd like to remind you of. Please find the chat and question icons. You can type in both features to the organizer. The purpose of the chat is to make the organizer aware that there's issues with the webcast. The question feature is for you to ask questions to Neil, our presenter today, and we will bring those questions back up when he gets done discussing the forgiveness piece. And I've asked him to go into the Main Street piece, even a little bit about the HEROES Act. So I want to make sure that your questions, we save time to get those answered. Lastly, you'll be muted through the presentation. So let's get with it. Today, our guest speaker is Neil Bradley, the Executive Vice President and Chief Policy Officer at the U.S. Chamber of Commerce. He has spent 2 decades working directly with congressional committee chairpersons and other high-ranking policymakers to achieve solutions. At the Chamber, Neil is responsible for aligning the organization's overall policy priorities and advocacy efforts. He oversees several major policy divisions with the Chamber, such as economic policy, employment policy, small business policy, and cyber, intelligence and security policy, health policy, transportation, infrastructure policy, and environmental affairs, and sustainability policy are all under his leadership. That's a lot. Neil, as you know, our nation and our economy are facing an unprecedented crisis. I've been extremely impressed with the U.S. Chamber's commitment to marshaling all its resources to help companies stay afloat and keep paychecks flowing to American workers and families. The commitment to making sure no family and no business should go bankrupt as a result of the coronavirus is greatly appreciated. Today, I have asked Neil to walk through the forgiveness portion of the PPP. So Neil, how about we just start there, and I'm going to turn it over to you.
Well, thanks, Kelly, and thanks everyone for joining. It's a pleasure to be with you all today. We value our partnership with the Chamber and with Kelly and her guidance and her counsel to us has really helped us step up the very programs that she mentioned to hopefully be of service to businesses across the country. Let me start with the PPP program changes. So as I think everyone is probably now aware, at the end of last week, the president signed into law a number of changes to the parameters around the PPP loan forgiveness. You all will recall that prior to the new law, loans were forgiven based on payments that a small business made in the 8 weeks after origination of the loan for principally their expenses related to payroll, based on the same formula that they used when they made their loan application, and additional expenses related to mortgage interest on their business, rent tied to their business, utilities tied to their business. And that was capped at no more than 25% of the overall expenditures that would count towards loan forgiveness. Now those parameters have been significantly altered. Perhaps the most important aspect of how they've been altered is an extension of the 8-week period. Now the 8-week period is 24 weeks. So it's the expenditures that a small business has in the 24 weeks after the loan is originated. The qualifying criteria is still the same, so what counts in terms of expenses for loan forgiveness has not changed. And now, in addition, the 75-25 rule is a 60-40 rule. And I know there's been lots of attention on that 60-40 rule and kind of an exasperation, which we share, that rule should have gone away entirely. And it should have, though I think these two elements taken together actually mean that for most small businesses, it's going to be relatively easy to achieve maximum loan forgiveness. Now, why do I say that? Let's go back to the amount of money that a small business would have borrowed. So you borrowed based on your payroll expenses over 2.5 months, so 10 weeks. So your borrowing was based on 10 weeks of expenditures, but now you get to count payroll expenditures, but now you get to count 24 weeks of payroll expenditures. So even if you're a small business who's in a situation in which you've had a reduction in headcount and payroll expenses, let's say of even 50%, at 50%, 10 weeks, that's still 20 weeks. Plus, on top of that, you still have the ability to count those other eligible expenses, mortgage, interest, rent, utilities, and it's unlikely that you would bump up against that 40% limit. We think kind of taken together, this is going to mean that it should be easy for most small businesses to meet that test. Importantly, some things to think about. As you go through this, is that for many small businesses, they were already either at or near the end of their initial 8 weeks. Remember, you now have an option. If you did everything in the 8 weeks to maximize your loan and you just say, I'm done with this, I want to file the paperwork and get the loan forgiveness, you can do that. You don't have to move to the new 24 weeks. However, if you were in the middle of that 8 weeks and it turned out that that wasn't working and you weren't going to be able to maximize loan forgiveness, you can switch to the 24 weeks. The other important thing to remember is that the law codifies some regulatory forbearance that the administration had previously proposed. Namely, what happens to a small business who seeks to bring back an employee, the employee doesn't return, and are they then docked in terms of their loan forgiveness because their headcount has been reduced. So here, the forbearance is actually strengthened under the law. What that essentially says is that if you extend an offer for someone to come back and they don't come back and you aren't able to fill that position with someone else who meets the similar skills and profile, or, and this or is critically important, or if the business needs of your business don't support filling that position, then you won't lose the loan forgiveness. We know for many small businesses that demand is down, and so it may not make sense to fill that open position. And now you have the ability to say, listen, employee John didn't come back. We don't have a need to fill that, and therefore you won't lose your loan forgiveness. The other important thing to remember about that is that we were always thinking about a June 30th deadline for those decisions about employees coming back. That's now changed. That's now a December 30th decision. So you have a lot more period of time to judge what's going to happen with your business, what employee needs that you have, and to adjust both over the 24 weeks for loan forgiveness and the December 30th deadline in terms of bringing employees back. Let me mention one other thing, and then Kelly, we can either go to Main Street or jump into questions on PPP, however you'd like to handle it. There's a lot of discussion in Washington about simplifying the loan forgiveness for smaller loans. And rather than kind of the whole process that you have to go through with your lender and approval, do a presumption that loans under a certain dollar amount, say $250,000, are presumed approved in terms of the application for loan forgiveness. Now, importantly, that has not been a change in the law, and it's not currently being proposed in Congress as a change in the law. This is being proposed as something for the administration to do to simplify the process. If that is to occur, and it's currently under ongoing discussions with Treasury and the SBA, but if that were to occur, remember that that doesn't eliminate any of the audit requirements or anything else after the fact. It just means that it's going to be a much quicker process for small businesses when they go back to their lender and they make that process for applying for loan forgiveness. It's something that we're supporting at the U.S. Chamber. We think it makes a lot of sense, but it's also important for businesses to understand that unless Congress changes it, there's not a fundamental change in the legal requirements. They're just expediting the paperwork aspects of that. Kelly, do we want to take questions on PPP, or do we want to go to Main Street and then circle back?
I say let's take some questions on PPP and then circle back. I want our audience to know that our community banks reached out and Neil responded very quickly last week, and I appreciate that, Neil, because they're working with the American Banking Association to expedite the SBA and Treasury Department's actions to on the forgiveness piece. They're working on the $350,000, and while you're mentioning 250, I'm sure that's going to be a little bit of a disappointment. Has there been any discussion about those loans that are 50,000 or less with no paperwork? I know that was briefly discussed, similar to a 1040 EZ was the example that was shared with me.
Yeah, and first let me say, Kelly's the first one who brought this to our attention, and when she did, we went and immediately talked to both our friends in the banking community, the ABA, and kind of got to the bottom of this, so thank you. You're right, there's lots of numbers bouncing around, in part because this is going to be a question for SBA and the Treasury at the end of the day. I'll tell you why some people are using 250, because 250 is the new cutoff for Main Street lending, and so it just makes all the programs kind of line up with similar dollar amounts. There's nothing magic about that. They could pick 350, they could pick 250, wherever they want to pick. If they go 250 and under, I suspect it will be the benefit that you were describing for the under 50,000, that's actually going to be the benefit that goes all the way up to whatever it is, 250 or 350. So it's not going to be if you're at 49,000, here's one form. And if you're at 249, here's another form. And if you're at 251, here's a third. That probably makes it even more complicated. So it's just going to be pick a number. If you're south of that number, then we're going to go with this expedited process. If you're north of the number, it's the paperwork that's already been provided. Okay.
All righty. So now I'm going to show my age, and I'm going to tip my glasses a little bit. So I read the questions that are coming in. So the first one is there a standardized form, or are banks using their own similar to the application process?
There is a standardized form. If you're interested in kind of getting a head start before you go see your lender, you can download that form at treasury.gov. There's a little red bar at the top of the website that takes you straight to information for PPP. And in that information for PPP is the loan forgiveness application form. We are similarly, and I don't know if this is going to come to fruition or not. If it does, we'll make sure that Kelly gets it around to everyone. We're encouraging them to do an online calculator. There are several of them that people have developed out in the market so that, it functions like an Excel spreadsheet. You input the right numbers, it does the calculations for you and kind of spits out the results. We think that either whether you're under 250 or above 250, whatever the number is, that would be very useful. So hopefully they follow our suggestion and they go down that path. But until then, you can download the paper form and begin doing the paperwork. I did one last weekend just to figure out on the paper version to try to experience it. It's not bad. It's not as bad as your taxes. Not super easy, but it's not as bad as trying to do your own taxes.
Okay, good deal. The next question, is the salary limit per employee still $15,384.61, even with the 24-week spending period?
No, well, so the cap was, the 15,000 was always the prorated of 100,000 over 8 weeks. So the 100,000 hasn't changed, but now because the 8 weeks is now 24 weeks, I had this number in my head and now I've lost it. Essentially it was 8 50 seconds of 100,000 is 15,000. It's 24 50 seconds of 100,000 will produce your new cap.
Okay. And the next question, are owner employee health insurance and retirement plan contributions included in the $100,000 allowance cost cap?
So to the extent that you have a owner benefit that operates like the employee benefit, right? So you're part of the group health plan along with your employees, then the answer is yes. Well, no, excuse me. The answer is it is treated the same way, which means it's an exception on top of the $100,000 cap, just like it is for your employees. So really two questions there, and let me make sure I'm very precise on this. The $100,000 cap is a cap on cash payments. So that's wages that you're receiving. Benefits can be on top of that $100,000, right? And so you have the ability to continue doing that. Then there's the separate question about, well, what if it's a benefit for the owner? And there, for example, in healthcare, they're looking at is it the same as your employee benefit? So, and the reason for that is that if you're an owner and a self-employed, for example, or independent contractor, what they've said is that doesn't count. And so you can't count your personal healthcare expenses as a sole proprietor, for example, for the purposes of loan forgiveness. So those are very parallel. Just think about it this way. If you have employees, you're providing a group health plan, it operates in the same way.
Thank you. Do you have to choose 8 weeks or 24, or can you submit forgiveness once you feel you have reached the terms?
Well, there would be no reason. So let's use this example. Let's say you're in the middle of your 8 weeks, you aren't going to make it, but in 16 weeks you've maximized your loan forgiveness, and you just want to file this paperwork and be done with it. Obviously, you could count those 16 weeks towards the 24 weeks, document that you've achieved the maximum loan forgiveness, because presumably you're doing this because you've hit the maximum, and there would be nothing that would prevent you from doing that. Because even if you went the full 24 weeks, there's no more to get forgiven once you get to 100%.
Right. Okay.
So if I were in that situation and I wanted to be done with this, I'd pull all that paperwork. Once I got to 100%, I might go a little bit over just so that in case anyone comes back and wants to say math errors or whatever, I'd put that all together and I go, here it is. I've clearly met the 100%, and have the full loan forgiven.
Excellent. Excellent. Next question. When can a small business begin filling out the loan forgiveness paperwork? I think you kind of just went through that, but I want to make sure. And is that the correct language?
So I don't believe Treasury's updated the new form. So you'll want to, if you're taking advantage of the 24 weeks, you'll want to get that updated form. In terms of the only caveat I would say is that let's say you're doing it right now and you haven't brought back all of your staff, so therefore you would potentially lose unless you could claim one of the exceptions, you would potentially lose some of your loan forgiveness because of a headcount reduction. You're going to want to wait until you restore that staff or you reach the end of the covered period, the moment June 30th, so that you don't lose part of that loan forgiveness. But let's say you had 10 people before, you got 10 people now, you've hit the full loan forgiveness. Once the paperwork's online for you to fill out, you should proceed.
Excellent. Next question. We had 2 employees prior to us applying for the loan. One of these employees quit. Since we now have the loan extension, could we use the amount granted for the second employee to continue to pay the first employee? You want me to read that last part again?
Yeah, yes, please.
Since we now have the loan extension, could we use the amount granted for the second employee to continue to pay for the first employee? So I see what they're asking.
Yes. So you've paid let's say it's 8 weeks and you've paid the first employee, or the second employee, the one who's still working for you. You're going to want to keep paying that employee and count that towards your loan forgiveness, I think is the question. So the answer to that is yes, but remember, you've now had a reduction in headcount, and you're going to have to get one of the exceptions for the reduction in headcount. So one of the exceptions could be that you've extended a written offer for the employee to come back and they declined, and that business demand, business circumstances don't necessitate filling that open position. So you're gonna want to be able to say, here's the exceptions to maintaining headcount rule that I'm using so that you don't have your loan reduced for that amount. This is important because before, 2 months ago, there were no exceptions. If you had 2 people, now you had 1, you were going to lose 50% of your loan forgiveness. Now you can avail yourself of one of these exceptions, but you got to document.
Documentation is going to be key throughout this. All
Correct.
right, so the next question. Many of the terms are hard to understand. So when they went back and cleaned up the process, did some of these terms change since we haven't seen the new?
So the biggest term that changed was what they call the definition of the covered period. The covered period was 8 weeks, and now it's 24 weeks. The terms of what qualifies, what counts as payroll, what counts as interest expenses, none of those have changed. So once you get yourself familiar with those, those fundamentals haven't. What's really changed, the 3 big changes are the time. Mm-hmm. It changed from on the 75% rule from 75 to 60%. And then this ability to have an exception to the reduction in headcount penalty.
Excellent, because that just answered the next question. What is a FTE equivalent?
So FTE is assumed at 40 hours. And so if you have someone who, if you have 2 people who are working 20 hours a week, you have 1 FTE.
Okay. In your 16-week example, are you saying that if there is an FTE reduction after the 16th week?
Yes.
Yeah, and I'm reading this, and I want to make sure I'm saying this right. That it would not go into the calculation related to the potential FTE reduction for the forgiveness calculation.
So this is there was never there was always the possibility that you would bring back employees, that you would, and then in July, under the old rules, you would have to let them go again. That remains the case, right? And so that is contemplated under the statute. The penalty for the headcount reduction is for a headcount reduction that basically occurred in the spring that was not restored. So let's say you're in a situation in which you've brought back your employees. It turns out that customers aren't coming back in July and you need to reduce your headcount again. You're not penalized for that reduction in headcount. If you made a reduction in headcount in the spring, let's say in the month of April, then you could be penalized if you don't bring them back or avail yourself of one of the exceptions. It's a weird, quirky kind of timing question where they're looking at your employees before February 15th, your employees during the period from essentially February 15th to April 30th, and then your employee headcount essentially when you're applying for loan forgiveness.
Okay. And now I am starting to get some questions about the HEROES Act again. This comment was just made. Yesterday, Senator McConnell has said, I don't think we have yet felt the urgency of acting immediately. And House Minority Leader Kevin McCarthy said, I don't see the need now. Do you mind discussing what the purpose of this legislation is and where it currently sits? So the challenge apparently locally that I've received in the last few days is individuals who took out the PPP did not need the PPP, and then now they're, so will they be able to take advantage of this tax break? Then they're talking about thresholds and numbers of employees shifting. So could you just walk us through a little bit about the different pieces of the HEROES Act and how it could impact small business?
Sure, you bet. So the HEROES Act is the House passed kind of phase 4 bill. It's a $3 trillion package. A lot of that, about $1 trillion, is aid for state and local governments. There is an additional funding for healthcare matters. There's additional funding for unemployment and extension of unemployment, including, for example, the extra $600 per week. There are changes to the PPP program that many of which were already enacted as part of this bill that just got signed into law. But others include, for example, expansion of the PPP to include other nonprofits, including 501c6s, to include local newspapers and media outlets. And then the real thing that will be of particular value for small businesses is the expansion of the employee retention tax credit. So if you think back to the CARES Act, one of the things that we talked about immediately after its enactment is that in addition to PPP, if you didn't avail yourself of that, there was this thing called the employee retention tax credit, where you could get a tax credit of up to $5,000 per employee. The House bill is a massive expansion of that tax credit that effectively becomes a 50% wage subsidy up to about $80,000 a year. So about a $40,000 refundable tax break with some additions on that to cover overhead. The Senate is likely to also do an expansion of the ERTC, but it's not going to be nearly as generous as the House proposal. That will be for folks who are looking for additional support for their business. That's the space that we're paying most attention to, and that's the one that when it gets resolved will be able to provide perhaps the greatest benefit to small businesses. In terms of status, this was the House bill passed a couple weeks ago. We thought that the Senate would take it up this month in June. In all honesty, Friday's labor report, which was surprisingly good news, although we still have a huge long way to go, has kind of taken a little bit of pressure off. And Senator McConnell has indicated that something is still going to happen, but this is going to happen likely now in July. One of the reasons that Senator McConnell, Senator Cornyn is so committed to getting this done is because this is also where a liability safe harbor, that's where that part of the package will also, that will be married up with assistance for state and local governments, some continuation of unemployment benefits, and some additional support for businesses. Let me mention just one thing that I failed to mention up front, that if you have a PPP loan, you did not likely, in fact, you shouldn't have taken advantage of the ability to defer the payment of Social Security taxes that you pay as the employer for your employees. So that 6.2 that you pay in addition to what your employee pays that you remit. This latest bill, and then the reason you couldn't take advantage of that is because that was prohibited under the CARES Act. That prohibition is repealed as part of this latest bill. And so you now have the ability through the end of the year to defer the payment of payroll taxes, that 6.2% that you pay. Now, that is not for free, right? So you get to defer it, but you got to pay it back to the federal government, 50% due at the end of next year, 2021, the remaining 50% due at the end of 2022. So this is not, it's not free money, but it is, if there are liquidity issues that you're facing, it is a way to help reduce current expenditures right now to help with liquidity problems.
Excellent. And before we move to the Main Street piece, we have one more question for clarification on the PPP. What about if you have a headcount reduction because an employee quit because they relocated?
So if an employee quit during that April period, the February to April 30th period, and you have two options available to you under the new law. One is that you hire someone else to replace them, or you say, I'm unable to hire someone else to replace them because the skill set couldn't find an otherwise eligible employee to fill that slot, or the business dynamics have changed, demand has decreased, you don't have work for that person, and you could gain the benefit of not restoring that position without losing your loan reduction. So it's no longer good enough that they just quit. If they quit during that period, it's important that that you demonstrate that there's a business need or an inability to replace that person.
Thank you. Now let's talk Main Street. So I'm going to turn this back over to you.
Yeah, so as you'll recall, back when the CARES Act was created, the PPP program was really focused on small businesses with fewer than 500 employees. And the Main Street Lending Program, administered by the Federal Reserve, was designed to be for mid-size and larger employers. And it's been very slow to get started. Initially, when the first draft of the parameters for the program came out from the Federal Reserve, there was a lot of concern because it really wouldn't be accessible to a lot of mid-size or smaller, fewer than 500 employees, businesses. 2 days ago, the Federal Reserve changed the rules for the program and has made it much more accessible. One of the biggest changes that they made was that prior to 2 days ago, the minimum loan amount was $500,000. So to even qualify to benefit from the program, you had to borrow in excess of $500,000. They've now lowered that amount to $250,000, and they've expanded the repayment periods. It was 4 years, now it's 5 years. And so with those changes, we think it's a program that is more likely to benefit more mid-sized businesses, and frankly now even smaller businesses. Now, this program is not like the others. It's not a loan forgiveness program like PPP, and it's not like an SBA program where you go to the SBA to get the loan. Instead, this program is administered, it's loans through your local bank, and it continues to have underwriting standards. So you'll go to, hopefully the bank that you bank with will agree to participate in the program. They will do due diligence, normal underwriting. They have the option of making you a loan that conforms to the terms of the Main Street Lending Program. And then the incentive and the benefit for the bank is that 95% of that loan is essentially purchased and backed by the Federal Reserve. And so therefore the risk to the bank is a lot less because they're only taking risk on the 5% rather than on the full loan. And the federal government through the Federal Reserve is taking the risk on the 95%. Technically, while we have new terms for this program, it is not up and running. So today, the Federal Reserve is not backing those loans or buying those loans from the local banks. Although under the term sheet, any loan that meets the criteria set out in the term sheet that's made after April 24th could ultimately be part of the program. So if this is something that you're interested in, the best thing to do is go talk to your lender, find out if they're going to participate in the program, find out in particular if they're going to participate in the program given these new terms, and then work with them to initiate a loan application. Importantly, if you have a PPP program, a PPP loan, you can also get a Main Street loan. And so for a business who's taking advantage of PPP, but there's still some need for additional liquidity and support, and that support is in excess of, in terms of what you need, is in excess of $250,000. This is a good program to turn to.
Thank you, Neil. I'm getting my monitor back. There we go. Then it went away again. Too many clicks. The new downloads will be available when by the U.S. Chamber. You all have been amazing at creating documents, easy to use, easy to read documents. When will the new one be ready?
It'll be ready by this weekend.
Okay. Fantastic.
I literally have it right here, and I'm making some final edits to it. So we're going to get that turned around.
So for those of you online and have registered for the webinar, you'll receive those first before we put them on our website to help you be ready to understand the 75 to 60%, what qualifies, probably some language definitions like they've had in the past, and then the 8 to 24 week extension, the discussion about the reduction of employees, hiring back, some of those clarifiers that we've had on this webinar today, I'm sure Neil will have in that piece as well. So
we'll have all of those things in that piece, and we'll also release some examples so you can kind of get a sense of, you know, if your loan's close to this amount, how it might impact you. And so that'll kind of give you a sense, even before you sit down to fill out your own paperwork. Sometimes it's helpful to just get a sense of, oh, okay, I see what's changed here.
Thank you. So as we prepare to close, a couple of quick announcements. Neil, will you talk about the partnership event on June 25th that we're participating in?
Absolutely, and thank you for your participation. So, you know, we've all seen over the last several weeks the tragic murder of George Floyd and the issues that have been brought to the forefront there, really issues that have existed for a long time. And, you know, one of the things that that we've done work on at the U.S. Chamber, and I know Long Branch has, and many other chambers and business associations, is really trying to expand opportunity as wide as possible in our economy to the broadest set of citizens. And we still have work to do. And one of the things that we committed to at the U.S. Chamber was that we wanted to put a new emphasis and re-emphasize the work that we're doing to expand opportunity to all Americans, particularly as it relates to education, employment, entrepreneurship, and the criminal justice system, and the ability to, for those who find themselves in conflict with the law and pay their price to society, to have a second chance. And so we're convening a summit on the 25th of June that will focus on those issues. And as of today, we have over 400 state, local chambers and business associations who've partnered with us in that event. Our goal is not to just talk about these issues, but to highlight the good work that's being done in various chambers and business organizations across the country, so that we can replicate that and scale it. And so this is not just about, you know, solutions in Washington. There are things that Washington can and should do, but there's things that Austin needs to do, and there are things that local communities need to do, and there are great things that are actually already going on. And if we can learn from each other what those things are, our view is that we can replicate them and get a lot closer to where we want to be a lot sooner. So we'll be announcing the speakers and the agenda for that event shortly. All of your members are invited to tune in to that event and to register and be a part of it. And then our goal is to replicate that action in the months ahead across the country.
Thanks, Neil. Well, at this time, Neil, I'd like to say thank you for taking time from your hectic schedule to help us think through next steps and prepare for the future. One of the roles that our chamber plays is to help create an economic environment that allows prosperity to occur. Over the past few months, we've worked hard to respond quickly to the East Texas business community needs by providing relevant webinars like the one today. Please be sure and visit the calendar on our website for a current list of webinars and functions that are happening. We are getting ready for Healthy View Summit on June the 24th. It's at 10 a.m. I believe. So we want you to participate in that. We'll be putting information up about the June 25th event that we're partnering with the U.S. Chamber of Commerce and other activities that are taking place. Again, on behalf of the Longview Chamber of Commerce and chambers from across East Texas, we appreciate your participation. Thank you and goodbye.